The climax of last week did not disappoint, with markets soaring on the back of upbeat jobs data from the US. But as we enter the pre-Christmas scramble, what is the potential to move and shake sentiment? Welcome to the Week Ahead programme with me, Monica Gibson, and on the phone to share their expert opinion is Thomas Flury from UBS. Thomas, currency markets are still storming on the back of the better than expected NFP figures. Many analysts believe the report is strong enough to warrant the Fed to announce tapering at next week's FOMC meeting. Do you believe this would be the right decision, and if so, what form might the tapering take?
First of all, I believe there is no reason to hurry right now at this moment with the tapering. They rather go in March than today. Markets are split, obviously, after the strong NFP figures, but inflation-wise, and also when I look at the 10-year yields, there is not enough pressure to really tell the Fed we need to do something. The unemployment rate is at 7%. And the target is 650, might even be lowered eventually if they think this is necessary, and for this reason they rather wait, let Janet Yellen come into office and then decide again, or Bernanke going, get the new Fed members which come in January. And the form of tapering starting in March, ending probably sometime in 2014 or probably October, is our house view. The question is if this goes straight forward on a stop-and-go basis. I can imagine markets very focused on a quantitative measurement at this moment. Let's say a reduction by amount X per month, but I would rather expect the Fed to have an intense view on how do the 10-year rates behave and so on. And then tapering might be more on a stop-and-go basis than many investors look at.
China industrial production and retail sales growth may have slowed in November, according to surveys of economists, in signs that expansion is cooling from the fourth quarter from the previous period. The strength of the renminbi seems to be of great importance, but what are you expecting from these figures and from the currency moving forward?
So the industrial production figures this week might show a bit of a disappointment. This is just a base effect that production slows down to 10%. Overall figures seem to be still kind of solid for China. The overnight move, over the weekend move of the renminbi from 6.9 to 6.07 and maybe even lower in the future, a little bit wasn't really a surprise given the long standstill of the renminbi, and we would also expect this currency to appreciate further. So we have in over 3 months a 6.05 and then going further down to 6 and even 5.90, 5.95 in 12 months. The main problem of the Bank of China is that too much money is flowing into the country, that you see the reserves growing too strongly, and when the reserves grow, the own money supply grows, and this gives a bit of a worry of overheating here and there. And that's why we expect them to move forward, get the appreciation done.
This week is also quite eventful for the EU, with German data and perhaps political posturing as Europe's largest economy edges closer to a grand coalition. So with all this in mind and what we have discussed, how do you see the euro-dollar performing in the lead up to 2014?
For us, euro-dollar is a range trading 138 on the top side, 130 on the low side on a medium-term basis. Euro-dollar is currently close to the 138, so for us it's something which tops out. It might be helped on the one side by the tapering discussion. It might also be helped by these coalition talks you just mentioned, because the coalition contract seems to be one which brings Germany closer to France rather than making Germany an example of a very strong and solid economy political-wise. And for this reason, some investors might think, okay, it's now time to not be overly optimistic on the euro But our call 138 is the top, and then it comes down again.
And just lastly, Tom, is there any other political or economical events which our viewers should keep an eye out for?
Obviously, it's the S&P's quarterly meeting, the quarterly assessment of monetary policy, which you should have a look on. The Swiss franc was very boring over this year, and there is a good reason to believe that it continues to be so, but not looking at it, ignoring the event would probably be not smart thing to do, as the Swiss economy is really doing almost too great for the current exchange rate. So have a look at it. Maybe we get Euro-Swiss back to 123, but there is still a slight opportunity to see 121 in the short term.
Tom, lovely to speak to you. Thank you so much for your time today. Well, viewers, that's all from me for today, but for some more currency forecasts, click back for our Targets in Focus, where I spoke to Anders Elkloff for his short, mid and long-term outlook for G7 currency pairs. Goodbye for now.